And hello and welcome. I think we are live now on YouTube. Just give me a couple of seconds. Yes, hello and welcome everyone. If anybody hear me, just say hello. I can, just say hello if you have any comments. Well, I previously I was online. I was not sure if I was online, but well, I hope you didn't see anything that you weren't supposed to see. And I will not say anything about that anymore. But let's make a market recap. As I have support and resistance here, which was a perfect place actually, support and resistance. What I saw here, it was an increase in the volatility here. As you see, it was like a sharp increase in the volatility, and at the same time, I got this. It was over here, as you can see. Let's Can you see this line here, horizontal or vertical line? It is the same like if you look at the right graph, which is the Nasdaq. You can see a quick fall in the Nasdaq and a quick fall in the SPY. And if you also look at the XLF on the right up here, where is the XLF? Yeah, you can see the Nasdaq here, and then you can see the XLF, also a sharp decline here, which was an indication to go bearish on the market. Yeah, so right now the market is actually pretty slow, not saying anything. I really don't think it will going to bounce up. If it's gonna bounce up, it will just be bouncing up like maybe up to this moving average here, and then continuing falling down. So yeah, that's about it. Yeah, that's about it. This streaming thing is getting a bit too technical for me, but it's about bitrate, and so I hope you are receiving me good and well, and you all understand what I'm can hear what I'm saying. Yeah. So since I cannot see any views here, so I'll not say anything until some viewers come in. Well, or at least I'll just speak to myself here. Well, we can see a decline here in the volatility, which coherent or co-work with the Nasdaq. Also, you can see the Nasdaq going up, and the SPY is also going up. But I presume it's maximum. The SPY will go up and test this resistance, and then fall back again. And as you can see, the rest of the market is going up. I don't know why I have AMD here. It shouldn't be here. I just put why do I have AMD? It should be SPY. Yeah, yeah. There we go. There we go. There we go. And the Nasdaq is also going up. XLF is struggling up. Yes, here we go. Here we go. Let me just update the other screen here. I have I have several screens, so I just want to see the XLF up here. And down here we have the Nasdaq and the PIX. Yeah, that's all look beautiful, but I really it was a good play with resistance over here. It was a very harsh resistance, very strong resistance, which is it was good. And as soon as the market turned around, could take some bearish trades. I want to show you the portfolio I have now. The portfolio that I have now. I cannot show you, obviously I cannot show you everything, but I will show you at least the portfolio itself. And it looks like this. This is a portfolio, long and short position. Let me maybe elaborate on which one are the long and which one are the short. Or I can just show this here. Yeah, that's much better. Give me a sec. Give me a second, please. Well, I cannot, obviously, I cannot show all the position, but I can show most of my positions here. There we go. New. And there we go. No, that was not good. 1 second. Should be better. I cannot. Actually, I can't. Maybe I have to do it like this. Actually, well, I cannot show it to you, unfortunately. But what the main point is that yeah, you saw previously I had okay, what I can do here is show you positions that I have, and I also show you, and then I tell you which one are long and which one are short. There we go. Now I can open it over here. As you can see, BAC, Bank of America, I have long positions there, which I'm down on it, and 175 as you can 57 as you can see, and Discovery Inc., which I am also long on Discovery Inc. and Futu, excuse me, Futu Holding Limited. I have a short position on this one, which is going good, and also short position on Intel, and I have a short position on Sunrun, RUN. On VSE, I have call position. Sorry, it's long position, and this is not going so well. Well, you just have to be patient, and also have long position on United X. I want to show you something which is why I trade the vertical trades. I don't buy puts, or well, sometimes I buy just one put or sell or buy just one call, but usually I do the vertical. But I want to show you how. Let me take a screenshot here and show you like the Futu trade, right? And let me analyze the trade. Okay, I'll take just a snip out of it. Oh, new. All right. Let me see here. So let's see. So this is let me, yeah, it looks like this, which means that excuse me, which means that the more the price fall, well, let me rephrase this. Okay, as long as the price is under 47 or stay at 47, then I will make the full premium for it. And this white line is today's date, right? So at today's date, if it's if it's the price stay at 47, so the amount will be $17 that I made, or the value of the trade is $17, right? But next day, I want to just make you understand something, because it can be very confusing. I remember at the beginning, I was really confused about the green line and the white line. Good. I'm trying to make a new okay, I cannot. Okay, just try to remember how the white line look like. Try to remember how the white line look like. So let me take another picture here, another time frame, another snippet. Good. As you can see here, the white line has moved a bit sharper up, and that's because I have simulated, or yeah, not simulated, but like move the date forward and see how the trade would look like, or the value of the trade, when if the price stays where it is, right, at $47. If the price stays at the $47, this will move this will be up here, and then I'll be, instead of 27 as previous, was it 27? Well, actually, it won't increase that much, because um, it was maybe it looked like this before, and now just move like this. But the idea is, as soon as you get to expiration, because this premium expires, the more you get to the expiry date, the more this get closer to the green line up here, and it looks something like that, right? And then at the end, this will disappear totally, and then you will have the full price, which is up here. You get the full price up here. Yeah, so that's why I like it, because it's, as long as the price just stay here, it doesn't matter if it goes up or down, as long as just the price stay within this within this price range, from 46 and downward. um, um, you will always be making profit out of it, right? It's first when the price moves the other way and begin to increase, then then you begin to lose some money, right? So this is called vertical. You credit sell a vertical call. So actually, you selling expensive coal and buying less expensive call, which means, actually, let's say if the market crash 100 points or whatever, like crash right really a lot, the max you can lose is this price here, which is 250. It's about 250, and that's the good about trading this vertical gap, because it's better than shorting stocks, because for the first, shorting stocks means that you really need to have a lot of money, a big amount in at the broker before they allow you to do it. And if you're shorting a stock and it just flies up the next day because of some news or whatever, then you can be wiped out, because you cannot close the position when the market is closed, right? So your stop loss will not work. But here, even if you have a stop loss that doesn't work, well, at least you mitigate the risk, because you don't get wiped out, because the most you're gonna lose is down to this green line here, and you still have the chance that it goes down and then goes up again, right? Because even it goes further down here, let's say it goes to like 56, which means that you are probably lost all the premium, right? But if the expiry day didn't come yet, so the price could move up here again, right? Or maybe even further up. And that means that you can get some of the losses. So what you do, the benefit of this kind of trade is excuse me, that you earn money from the premium and the time decay. And the time decay means that the value of the option loses its value, loses its premium when you uh, um, yeah, any option, call or put option, it loses its premium, and the seller of the option is the one who gets the premium, right? But of course, so let's say you're holding a call position, which means that you want the price to go up, but the market is moving sideways, which means that it's not going anywhere. So as long as you hold this call option, you will be losing money because of the time decay. There's something else I want to tell you is I want to explain the time decay thing. You would think that the option value, because of the time decay, it it loses like linear, right? Like you say, like let's say this is like 5 days here and 5 days to expiration. Okay, so you have the expiration over here, right? This is the day of the price of the option expires, right? So you'll think that it goes like this, like every day you lose the same amount, you lose the same amount, you lose the same amount, which is it actually is not like that. Actually, it's more. Let me draw, if I can draw something here. Well, sorry. Let me draw it over here. Actually, it doesn't look like this. This is not what it looks like. What it looks like is actually look like this, which is it in the beginning it decreases like linear, but at the end, when it comes closer to the expiry date, it really uh, decelerate and really fall very 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 quickly. So let's say you bought it on Monday, on Friday. So let's say you buy it on Friday morning, right? So the value will will really fall very very hard. But again, if you sell an option at Friday morning or buy it, you will find out that the volatility, especially in the morning, is very very high. It's very high. But if you can get someone to buy it to hedge their portfolio, well, then you sell it to them, right? So yeah, yeah, cool. Yeah, so that is how it looks. What do they say, the Americans? They say how the cookie crumble. Yeah, that's what they say. I don't know even what it means, cookie crumbles, but right, right. All right. Let me see here if boom, 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 boom. I think Oracle here could be a good shorting position. Yeah. Let me see. It's a 60. Yeah, this actually looks like a very good shorting position. The Oracle. Let me see. Do I already have own sell? Pum 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 pum. All right. I think I'm gonna take this trade here where I'm selling Oracle. Oops. I am selling Oracle to. I'm selling a call, vertical call, because I think it's going down. and it's moving also. Yeah, so my stop loss will probably be, it is over here. This is my stop loss. And let's see if I can get it someone to buy it. That would be awesome. So I'm selling a vertical, which is snip to, let me take a snip. I'll show you how it looks like. There we go. And this is how it looks. You see, I'm buying a call for 79 coal and selling the 78. So you get a credit. This is a credit spread, and that is good. Now let me execute this trade. Pom, 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 pom. Let's do this. That should be okay. So with this volatility in this market, so my as you can see, I'm I have a very tight stop loss, and I'm in the trade. That's good. I am in the trade. Wait a minute. I need to be sure that, oh, you can hear me, right? Yeah, I hope so. Yeah, right. So I trade for today on Oracle. Good. Well, I guess that was it. This was my first live. So I hope you enjoy it. I hope you learned something. And yes, please subscribe, because I think I'm going to be going live even more in the future. So yeah, cool. All right. I wish you a great day. I'm out.